further extend our leadership position well into the future. This concludes our key message, and thank you for your attention.
Thank you, CC. This concludes our prepared remarks. Before we begin the Q&A session, I would like to remind everybody to please limit your questions to 2 at a time to allow all the participants an opportunity to ask their questions. Should you wish to raise your question in Chinese, I will translate it to English before our management answers your question. For those of you on the call, if you would like to ask a question, please press the 0 then 1 on your telephone keypad now. Questions will be taken in the order in which they are received. If at any time you would like to remove yourself from the questioning queue, please press 0 and then 2. Now let's begin the Q&A session. Our chairman, Dr. Mark Liu, will be the host.
Hello, everyone. Thank you for coming to this conference. I wish you all healthy and well. I think we hope the above reports already answered some of your questions, but it definitely shows this company stands on firm ground, and we will be prepared, prudently going through this near-term uncertainty. In the meantime, we'll be also confident and well prepared for our next growth period. So now the floor is open for your question.
Thank you, Chairman. Operator, please proceed with the first caller on the line.
Yes, the first one to ask question, Randy Evans, Credit Suisse.
Okay, yes, thank you. Congratulations on the good outlook. My first question, I wanted to ask on your view on the business cycle. You raised your outlook to 35% in a strong third quarter. With that strong outlook, wanted to see what is driving your expectation for inventory drawdown in second half, and how broad you're seeing the inventory drawdown. And the follow-up question I wanted to ask to that is, what is your view on the first half? With your view, customers will be drawing down through first half. Do you see underutilization, and how severe do you expect that correction?
Okay, Randy, please allow me to summarize your first question. So I think Randy, his first question is in looking at TSMC's third quarter guidance and also looking at our full year growth to be mid-30s. He's wondering, I believe, Randy, how to reconcile this with our expectation of the inventory adjustment in the second half and also into the first half next year. So how do we reconcile our view on the inventory cycle against our own business? Is that correct, Randy?
Yeah, that's correct. Is it an initial view on first half, how much correction you're looking for in your business?
Randy, this is CC Wei. Let me answer your question. Yes, we do have mid-30s growth in this year, but we also expect our customers start to take action to decrease their inventory level. How far we expect that a few quarters, at least into the first half of 2023, they will continue to do the inventory correction. And did that will lead to TSMC's utilization? Let me say that despite the ongoing inventory adjustment and macro uncertainties, the structural growth trajectory in the long-term semiconductor demand remain firm. With our leading and differentiated advanced and specialty technologies and a strong HPC portfolio and strategic customer relationship, we expect our capacity remain tight and our business to be more resilient, and we are confident in both our near-term and long-term growth outlook. Did that answer your question?
Yes. To clarify, do you expect even through first half to remain tight, factoring in your tech position and some of the projects you have?
Yeah, you remain.
So I think Randy wants to ask, in the first half of next year, do we expect how do we see our capacity utilization given the ongoing inventory adjustment?
I cannot give you exactly the number that we are talking about, but let me say it's healthy. Okay.
Okay, great. Hey, my second question on the capex, two parts. Just want to understand the push-outs a little more, what it's affecting, the 3 nanometer, how much ramp, the 5 nanometer or mature nodes. And if you could also discuss the framework for next year's capex. I think you've made comments about we could be above 40 billion. If you could give a framework for how you're thinking about next year capex.
Okay. So Randy's second question is on the capex. He wants to know, with some of the tool delivery issues, the capex push out, is this more for 3 nanometer? Is this for 5 nanometer? Or is this more on the mature node side? And he also wants to know, how does this impact our capex for 2023? As we said before, that 2023 could be 40 billion or higher.
Okay, Randy, this is Wendell. The first question, as CC said in his prepared remarks, that the schedule, the tool delivery schedule changes currently, as in both the advanced and the mature nodes. Okay. And your second question is about next year's capex. It's too early to talk about next year's capex. But as we always said, we invest the capex in a year for the future opportunities. So as long as the future outlook is good, we will continue to invest, but of course in a disciplined manner.
Okay, and just for this year with the push out, what's your expectation for how much this year would be? And that's my final question. Thank you.
I think next year will be too early, but I can tell you that this year it will be closer to the lower end of our previous guidance.
So closer to the lower end of the guidance of 40 to 44 billion, Randy. Yeah.
Okay. No, thank you, Joe.
Okay. Great. Thank you. Operator, can we move on to the next participant, please?
Next one to ask questions is Bruce Lu from Goldman Sachs.
Hi, thank you for taking my question. Congratulations on the great result. I think the management has stated that the next few years, the revenue growth will still at the 15 to 20% growth, and it is driven by the compound dollar content growth. This is actually the most difficult part for the investor, or the biggest discrepancy when we talk to the investor. How much is driven by the dollar content growth? Because investors do not really see the dynamics, right? So, for example, like 15 to 20% growth for the next few years, how much is driven by dollar content growth? How much is driven by shipment, or how much is driven by the ASP or product mix improvement?
Okay, let me, Bruce, thank you. Let me summarize your first question. So Bruce is really looking at our long-term growth. We said that we will grow between 15 to 20% CAGR in the next several years. He wants to know, out of this 15 to 20%, how much is driven by silicon content? How much is driven by, Bruce, I think you said a shipment? How much is driven by ASP?
Bruce, let me answer the question, but exactly the number I cannot share with you because it's confidential. But let me say that the content increase actually is at least mid to high single digit for our edge devices. And then even that all the electronics devices, even the growth is flattish or some kind of a low single digit, it's still growing. It's still growing. And combined with all this and our value setting with our customer, so we are confident to say 15 to 20% CAGR is achievable. Okay.
Okay, thank you. So my next question is for the mature node and the specialty capacity expansion. I think Chairman recently commented that you will expand your mature node and specialized capacity by 50%, 50, in the next 3 years. I mean, this number looks a bit big. I mean, can you tell us that how do you achieve this 50% capacity expansion by the new capacity or conversion, and where are those demands? How do you see the mature node supply and the demand in the coming few years?
Okay, Bruce, let me summarize your second question, please. Go ahead. So Bruce's second question is on mature node and specialty capacity expansion. He's looking to say TSMC expanding our mature node specialty capacity by 50%. That looks very big. Is that all new capacity expansion? Is some of this also coming from logic conversion to specialty? And then also what applications are driving this?
Well, let me answer the question. 50% increase, we mean that 50% is in specialty technologies capacity. Doesn't mean the overall capacity increase. Okay, we did this because of our customers' need, and we work closely to support their growth. So it's not a plain 50% increase in the logic capacity. No, it's a specialties.
If I may add a little bit, the expansion also includes both the new capacity and conversion of existing capacity.
So how confident you are, I mean, in terms of this kind of capacity expansion, what kind of application which will keep you confident for this kind of increase? So, because in the past, like 20 years, your capacity expansion is mostly in the advanced node.
So Bruce wants to know what is keeping TSMC confident to have such expansion on these specialty technologies, as most of our expansion in the past has been focused on the advanced nodes.
Bruce, you are right. In the past years, TSMC always increased the leading edge capacities. We did not increase any specialties in the past few years, except a few upgrades from logic to specialty. But this time is different. First, because we can see the silicon content continue to increase on all the edge devices. It's included on the demand on the leading edge capacity. It also requires the specialties content inside. And so at the urge of our customers' request, TSMC closely work with our customer and to expand our specialty capacities. Okay, how confident? Very, very confident.
I believe so. Thank you.
Thank you.
Thank you, Bruce. Operator, can we move on to the next participant, please?
Next one to ask questions, Sunny Lin from UBS.
Hi, good afternoon. Thank you for taking my questions, and congrats on the strong results. So my first question is on the semi-cycle. Earlier, that you have done some scenario analysis on the semi-cycle for 2023. So I just wonder what's your current base case for semi growth for 2023? Do you think if it will be like a typical down cycle like in 2015, 2019, or would it be a more meaningful correction? Thank you.
Okay, Sunny, thank you. Sunny's first question is on the semiconductor cycle. She wants to know what is TSMC's base case for 2023. Do we think it will be more of a typical cycle, such as in 2015 or 2019, or it will be a more of a meaningful correction, I believe are her words.
Yeah, hey, Sunny. Yes, our base case is more of a typical down cycle. The inventory correction maybe go for a few quarters through the first half of 2023. It's not like a big down cycle back in 2008 or something like that.
Got it. Thank you. And so my second question is on 3 nanometer, as we are ramping up the technology in second half, how should we think about the revenue contribution into 2023? In terms of profitability, will the 3 nanometer ramp up have any impact into Q4, or if the impact will be mostly from Q1 next year?
Okay, and so thank you, Sunny. So Sunny's second question is on 3 nanometer. With the ramp, she wants to know what type of revenue contribution from N3 in 2023, and also with the ramp of N3, what would be the impact to profitability? When should we see it, and what type of impact from N3? Thank you. That's correct, right, Sunny?
That's right. Thank you, Jeff.
Sure.
Okay, Sunny. In terms of revenue contribution from M3, I have to say that nowadays it's less meaningful to talk about the revenue contribution of a leading node at the very beginning when we start to ramp it compared to in the past, because the total pie is increasing, and we believe it will continue to increase. Dollar amount wise, it's certainly bigger than the previous nodes at the very beginning stage. This is your first question. In terms of profitability dilution, we expect that it will impact between 2 to 3 percentage points in gross margins in the first year, 2023. Thank you.
Got it. Thank you. That's very clear. Thank you very much.
Thank you, Sunny. Operator, can we move on to the next participant, please?
Now it's turn for Gokul Hariharan, JP Morgan. Go ahead, please.
Gokul, are you on the line? You might have to unmute.
Yeah, hi, sorry. My first is on the...
Gokul, sorry, you're breaking up. Can you try again? Repeat your question, please.
Yeah, sure. So my first question, inventory cycle.
Gokul, sorry. Okay, let's try one more time because you continue to break up. Let's try one more time. If not, I will have to ask you to dial back in. Sorry, please repeat your question again.
Sure. Hi, can you hear me now?
Yes.
Okay, my first is inventory. Could you talk a little bit about what is the expectation
Okay, Gokul, I'm sorry. Your line is very unstable, so I will ask you to please try to get back into the queue, and we'll address your question. Okay, operator, can we move on to the next caller, please? Apologies for that.
Next one to ask question, Brett Simpson, Arete Research.
Yeah, thanks very much. I had a question on the inventory burn-off that you were signaling potentially for first half 23. Can you talk more broadly about fabless days of inventory today and how you see this trending in the second half of the year? And then in terms of your outlook for the overall semis industry, what is your current view for 2022 growth and 2023 growth, and has your view changed in the last 3 months? Thank you.
Okay, thank you, Brett. So Brett's first question is looking at inventory and the overall industry. So his first question is about the inventory adjustment. We have said that it will likely be through first half 2023. So what do we see for the fabless DOI trending in second half of this year?
Yeah, yes, Brett. We expect the fabless DOI to come down in the second half of the year gradually. And your second question?
Come down throughout second half of this year, correct?
Yes.
And then the second part of his question is Brett, sorry, again, your second part is looking at the industry. What is our current view on the semiconductor industry for 2022 and 2023, and how has our forecast changed or not?
That's right.
let me answer the question. Our forecast for the semiconductor exclude memory, and the forecast on the foundry growth in 2022 remain the same as we projected earlier. For 2023, it's too early to forecast, but as we said, the inventory correction will continue to go on, and for TSMC, because our technology position is much stronger today, and we also have a very strong portfolio in HPC, and we have a long-term strategic relationship with customer. So we think 2023, even there's a inventory correction, is still a growth year for TSMC.
Okay. Jeff, can I just have a second question? Is that possible?
Sure. One more second question. Yeah.
So we've been hearing from some other leading-edge chip manufacturers that they are looking at the opportunity to work with project financing companies when it comes to new fab builds. I think companies like Brookfield has been mentioned. How does TSMC view this trend, and is there a fab rental model or a way to reduce the free cash flow burden in this industry as you bring on new fabs? Thank you.
All right, so Brett's second question is he wants to know what is TSMC's view. His observation is other companies in the industry are using project financing to build new fabs, this new fab rental model. So what is TSMC's view on this?
Brett, we are not considering project financing now. Normally, project financing entails stricter terms and higher costs. We will finance the expansion mainly from our operating cash flow and borrowing using our strong balance sheet. That's our current policy.
Okay, quite clear.
Great, thank you.
Thank you, Brett. All right, operator, let's move on to the next participant, please.
Next one to ask question, Charlie Chan from Morgan Stanley.
Hello, good afternoon, and also congratulations for great results. So my first question is about your HPC and high-performance demand, because our view is that the macro slowdown or recession should impact the cloud capex and the high-end consumption. So, management, do you think that the so-called inventory digestion will sooner or later apply to your data center semi customers and the high-end smartphone customers order in the coming quarters? Thank you.
Okay, so Charlie's first question is looking at the inventory adjustment in light of the macro slowdown. He wants to know, do we believe or see impact to cloud service provider capex or high-end smartphone sort of to have inventory adjustment next? Is that correct, Charlie?
Yes, thank you, Jeff.
Charlie, this is C.C. Wei. I think to answer your question, you might think they have too much of inventory in the HPC area. But as we said, that in our life, there are so many edge devices continue to create data. And those data need to be processed and with sufficient speed and efficient power consumption. And that require our leading edge technology to provide the solution. So even there is an inventory correction or something like that, we expect our business to be less volatile and more resilient through the near-term uncertainties. And also, we are highly confident in our long-term growth outlook.
So how about the high-end smartphone inventory correction? Do you expect that top brand smartphone inventory to see correction as well on the semiconductor demand? Thank you.
So Charlie also wants to know, do we expect high-end smartphone inventory correction on the semi demand?
To be frank with you, we did not see too much of an inventory on the high-end smartphone build up. So no.
Okay, good. Thank you. That's very helpful. And my second question is about your future technology development, right? So either Mark or CC, can you please help me? So this is the first time you disclosed the N2 GAA logic density improvement. I think more than 20% logic density increase still better than the market shares. But compared to the previous node, there's a significant slowdown. So do you think, first of all, N2 is a full node migration? And do you think that there is a kind of a significant slowdown of a more slow? And what does that mean to your capex per K for N2 versus N3? And lastly, backside Power VIA, right? So I'm very interested in your kind of N2, what it means to the long-term technology and also capex. Thank you.
Okay, maybe I'll summarize Charlie's second question into a few different parts. His first question is on N2 technology, and he notes that the logic density gain is more than 20%. But does this represent a significant slowdown, especially in the context of Moore's law? And what does this mean for technology as a whole? Maybe Chairman can address.
Let me answer your question. First of all, CC just mentioned our N2 will be the most advanced semiconductor technology in the industry when it is introduced. Because this technology, we work closely with our customers and regarding the scaling factor included. But Charlie, from now on, we have to look at the technology in a platform fashion. The N2 technology is not just the wafer scaling. The N2 technology include transistor scaling, but also include the new power line structure, and also include the new chiplet technology to allow the more architectural innovation in our customers. So this is a whole set of technology offering composed to be N2 nanometer. The scaling factor is smaller, but we really know the customer's needs today is really about the power efficiency. And this will be a full node power efficiency migration. And to control the cost, that is the reason we control the scaling factor while maintaining the same value for the new generation of technology. So that's my report. Yeah.
Great. And also, Charlie is asking about the backside power on N2.
Okay, let me add some few points. On the backside power delivery, actually we call the super power rail. It's part of our N2 platform offering. And at the proper time, we will introduce it to the market whenever our customer need it.
Yeah, so if you put that together, right, it seems like lower, you have this Power VIA. What does it mean to your capex burden in the coming years? Thank you very much.
Yeah. Okay. Okay. Thank you, Charlie. Operator, can we move on to the next participant, please?
Next one to ask questions, Laura Chen from Citigroup.
Hi, thank you for taking my questions and congrats for the good result. My first question is about your view on the key applications. Actually, starting from the last quarter, we already see that high computing PC has been the key catalyst for TSMC. So I'm just wondering your view on the from various architecture like ARM-based or x86. Can you share with our view that what will be the key driver for TSMC for the next few years? Do you see that will more from the ARM-based CPU or more upside from the x86? And also on the smartphone space, I recall that in the previous analyst call, you mentioned that the penetration rate for the 5G, you expect that will be about like 50%. But given the weak demand cross-flow, what's your latest view on the 5G smartphone penetration? That's my first question. Thanks.
Okay, so Laura's first question. First, she wants to know on HPC. She notes HPC has become the largest contributor by platform to our revenue. So she wants to know, when we look out over the next several years, how do we see HPC? Is this driven by ARM-based or versus x86? I think that's the first part of her first question.
Laura, our HPC definitely is growing healthy, and since TSMC is everybody's foundry, so we support both x86 and ARM-based. What do you say for the high performance computing, both, and both are significantly grow in TSMC.
And then she also wants to, sorry.
Yeah, sorry. Yeah, it seems like TSMC already has a very high exposure on the ARM-based. So can we expect the next few years for the growth driver to more come from the x86?
Can I answer this question? We have very high exposure to x86 also.
But Laura, I think we have said numerous times, and it still holds true, that HPC will be the largest contributor and increasingly the main driver of TSMC's growth over the next several years.
Yeah.
Okay.
Yeah, and Laura, your second question is the 5G smartphone penetration rate. We're still looking at about 50% at this moment.
Okay, thank you. And if I can ask the second question about the gross margin outlook, I think 59% is really amazing. And considering your capex discipline and the consistent delivery in the advanced node, or maybe price hike as well, can we expect that we'll have more upside to your current 53% gross margin target?
So Laura's second question is on the gross margin. She notes that gross margin for second quarter, 59.1% is very high. So is there an upside to our long-term gross margin target of 53% and higher?
Laura, as we mentioned before, there are 6 factors that affect our profitability every year, excluding the foreign exchange rate, of which we do not have any control on. The other factors taken into consideration, we are confident that a long-term gross margin of 53% and higher is achievable, and we certainly will try to work hard to deliver better than that.
Okay, thank you very much. That's very helpful.
Okay, thank you. Operator, can we move on to the next participant, please?
Next one, we have Gokul Hariharan from JP Morgan.
Thanks, Mr. Again. The first question is on the U.S. expansion. There's been a lot of commentary around very high costs for U.S. expansion. I think Founder Chairman for U.S. fabs compared to Taiwan. Could you talk a little bit about the U.S. expansion and how they are going? What kind of cost differential is TSMC seeing, and what is your negotiations with Arizona government as well as customers in terms of filling up the cost differential? That's the first.
Okay, Gokul, I have to say again, you're breaking in and out. Let me try to summarize your question, make sure we got it right. So Gokul's first question is about our U.S. fab. He notes that the cost is higher. Our founder has recently said this as well. So Gokul, I think your question, again, you broke up, but I think your question is about how do we manage the how will we manage the cost gap and close the cost gap? Is that your question?
And what is your discussions and negotiation with customers and governments regarding higher costs as well as subsidies?
So, okay, thank you, Gokul. So Gokul wants to know, with the higher cost, how are our negotiations and discussions with governments, how are negotiations and discussions with customers about this cost differential?
Okay. Hey, Gokul. Yeah. Yes, I did mention that the cost in the fab in U.S. is higher than we expected. We are still in the construction stage of the fab. And during this past 2 years, we found that the labor cost in the States is higher than we planned. But also, some of the COVID supply chain interruption also was unexpected. And we did confer these information to the government at the location, and give them a full perspective of the cost gap. But Gokul is indeed our customer in U.S. They all want to load that fab. I mean, this is a needs from our customers, and we also believe there is a amplify our business opportunity at there. So the cost is increasing, but cost is not the only factors. And we're still working on the government subsidy, and we're continue working on the cost reduction. And every company have a different ways to reduce the cost. So that is the work in the process.
Thank you very much. My second question, would the TSMC consider any kind of a joint venture fab in the U.S. with potential large customers? Historically, TSMC has done this with some of the customers like Altera and NXP long back. Would you consider any kind of joint venture fabs potentially with any of the customers in the U.S. if the outsourcing opportunity is big enough? Thank you.
Okay. So Gokul's second question is, again, would TSMC consider any type of joint venture fab in the U.S. For outsourcing? He notes we have done certain JVs in the past. So is this something we will consider in the U.S. for outsourcing opportunities?
Yes. Let me answer this question again. TSMC indeed has some joint venture arrangement maybe 20 years ago in the U.S. But right now, we understand, with that experience, we understand our customers' demand will go up and downs, and we don't want to limit this fab into a specific set of customers. It's open to our own customers base to utilize. So no, at this point we do not plan to have a joint venture arrangement in the U.S.
Okay, Gokul. Operator? Oh, Gokul? Okay, thank you, Gokul. Operator, can we move on to the next participant, please?
Next one to ask questions, Charles Shi from Needham & Company.
Hi, good afternoon. Thank you for taking my question. I want to go back, a quick clarification about N3 gross margin. You kind of mentioned, probably first time quantified how much dilution you are expecting, 2 to 3%. Can you let us know dilution relative to which number? Because there's one long-term gross margin number, 3% and higher, and there is another one which is where your gross margin is tracking. That's a few points above your long-term target. This is a kind of little bit moving target here, so can you clarify with us? Thank you.
So Charles is asking if we can clarify our gross margin target. His question, well, I think, again, when we talk about N3 diluting 2 to 3%, it is for the first year, right, which is 2023. And so he's wondering, I think, Charles, your question is, does this dilution continue? Does this change our long-term gross margin target? And maybe more, I think he's thinking about what are the gross... Yeah, sorry. Let me stop there. Is that your question, Charles?
No. The 2 to 3% dilution relative to what is my question. Is it relative to your long-term growth target,
okay.
to 3% and higher, or where you're tracking, which is 58%?
Okay.
Yeah, that's my question.
Thank you, Charles. So Charles is asking, when we talk about 2 to 3% dilution, are we looking at 53% diluting from there, or are we looking at 59% diluting from here?
Charles, it's a diluting from next year's gross margin as we forecast. It's neither 53 nor 59. Bear in mind that when we talk about 53 and higher, it already included the dilution effects from the N3 dilutions.
Okay, Charles?
Thank you very much.
Yeah. Do you have a second question?
I do. I have a more long-term question. Thank you, Chairman, for mentioning N2's full package, which includes chiplets. I want to specifically ask you about chiplets, 3D IC. I think you recently talked about expanding SOIC capacity by 20 times through 2026. That's quite a bit amount of capacity addition. I think 1 year ago, you sort of mentioned SOIC is something you're targeting for high-performance computing application. But given the amount of capacity increases you're planning, any updated thoughts on whether that can be a technology, possibly at N2, being used for smartphone platform? Any other color you can give us would be great. Thank you.
Okay, thank you, Charles. So Charles' second question is on 3D IC. He notes that in particular, we are talking about SOIC and also expanding the capacity there. We have said in the past this is primarily adopted by HPC applications. His question is, with such capacity expansion, do we also expect smartphone customers to adopt 3D IC solutions like SOIC at some point in the future? Is that correct, Charles?
Yes, thank you very much.
Okay, let me answer this question, Charles. So far, the SOIC is primarily adopted by the HPC applications. Okay, because of that is very fit for their high speed and power efficient. But for mobile adoption, it will depend on their chiplets architecture, interconnect density requirement, thermal or other requirement, and we will have other solution to address the mobile requirement.
Okay. All right. Thank you, Charles. Thank you. Operator, can we move on to the next participant, please?
Next one to ask question, Mati Hussaini from Susquehanna International.
Yes, thank you for taking my question. I just want to go back to the capex. I think the chairman had guided back in 2021. The chairman guided to about 100 billion of capex during the 2021 through 2023 period. And now this morning you're highlighting the fact that capex this year could be 40 billion. So if I use the 100 billion as a bogey, it suggests to me that your capex could be down by as much as 8 to 10% in 2023, unless you are raising that 100 billion guide. I just want to get some color on this. I don't have a follow-up.
Okay, so Mehdi's first question is on our capex. He notes back in April of 2021, we had guided for 100 billion capex in the next 3 years. And so now he's adding the math up for last year and this year and wondering, does that imply a decline in our capex for 2023, or do we have a new revised guidance for the capex spend?
Okay. Matty, let me answer this. We're not going to talk about the $100 billion today. We're not going to comment capex beyond 2022. We've already given the guidance range of 2022. Now, as we mentioned before, every year when we invest in capex, it is for the future growth opportunities. So as long as we believe the future outlook is good, we will continue to invest in a disciplined manner.
Got it. Just a quick follow-up here. Despite the fact that capex was up 76% last year in 2021, the depreciation so far has been tracking flattish. It was flat in Q1 and down 3% in Q2. Should I expect a bigger step up in depreciation going forward?
Okay, so Mehdi also wants to follow up to ask about depreciation. Despite the increase in capex, why is the depreciation growth pretty flattish or low so far this year? And then should we expect a step up in depreciation for 2023?
Mehdi, every year there are new depreciation coming in. But at the same time, there are depreciation getting out of the depreciation table. So some comes in, some goes out. This year, we expect the depreciation will grow about mid-single digits from last year. It is lower than when we guided at the beginning of the year because of some tool delivery schedule change, as CC mentioned earlier. Now, for next year, it's too early to give a specific number, but the depreciation will be much higher than this year.
Okay. And just since everyone had most of my second question, may I squeeze one quick follow-up?
Well, you have 1.5. I'll let you another half question, please, Mehdi, because we still have a few people on the line.
Thank you.
Yeah.
Sure. I'll make it very quick. When I look at your customers, their inventories are at a 25-year high, and I think everyone is going to take a look at the seasonality in the second half. And I'm just curious, what are the key variables, what are the key metrics, or what are the key strategies that you have in place that could mitigate the gross margin downside risk if your customers become more aggressive in inventory correction into next year?
Okay, so Mehdi's question is noting customer inventory at customers are very high. So what would be the key variables or metrics for TSMC to mitigate our gross margin downside or risk if customers were to adjust their inventory further? Is that correct, Mehdi?
Yes, if they become more aggressive in inventory correction into first half next year.
If customers were to become more aggressive on their inventory correction into first half next year?
Well, let me answer the question. As I stated in the remark, our customers are doing the inventory correction, but I said that customers' demand still exceed TSMC's capability to support for this year. So even they do the inventory adjustment, or they say that they decrease their demand versus their original number, TSMC's capacity is still very tight, and we remain very healthy in the utilization. So that's why we can keep our gross margin intact. Did I answer your question?
Okay. Thank you, Mehdi. Operator, let's move on to the next participant, please.
Next one to ask questions is Brad Lin from Bank of America.
Hello, good afternoon, everyone. Thank you for taking my question. So firstly, congratulations once again on the strong earnings. And my first question is about advanced packaging. We learned that advanced packaging is very, very important for TSMC's long-term growth, and TSMC has a great variety of offerings to provide higher value to customers. So would you please share your insights on what the key barriers are for a wider adoption by clients? And would you expect the contribution mix to increase gradually, or if there is a point to see an explosive growth from the advanced packaging? And by the way, we saw the news about the DDIC R&D center in Japan, and how will that center accelerate the progress? Thank you very much.
Okay, so Brad's question is on advanced packaging. I believe, if I heard you correctly, what are the key barriers for wider adoption of our packaging solutions by customers? What is the long-term revenue growth outlook of advanced packaging? Is it going to be explosive growth or grow similar to the corporate average? And also the role of our 3D IC center in Japan in developing advanced packaging solutions.
Okay, that's a very long question, but let me answer one by one. First, we developed a very advanced packaging technology to meet the customer's demand. So far today, 3D IC or SOIC, we develop for the high-speed performance HPC applications first. And that one mostly starting to be adopted by all HPC customers starting from today. So we expect is gradually will ramp up, and until that's 2 nanometer, I think it will have much more demand in that technology node for the 3D IC. That's what we expect, and we expect that growth of this 3D IC's business will be healthy. Probably a little bit ahead of TSMC's growth forecast. Now, let me turn to the 3D IC center in Japan. We established a 3D IC center because of Japan has a fundamental advantage on the raw material, also on the packaging area. For example, the substrate. They are the number one in the world. And we need that one technology to complement the TSMC's 3D IC technology so we can serve our customer better. And that's why we established a 3D IC center, technology development center over there. Did I answer your question?
Yes, very clear. Thank you, sir. So maybe another follow-up that's also about the IC substrate. So ABF-IC substrate currently plays a very important role in the advanced packaging, of course, especially for CoWoS. And the substrate area demand potentially enlarges with the increasing advanced packaging penetration. So with the rising integration level of a chip, do you expect the new material to potentially replace ABF? And any plan to secure substrate supply or upgrade the design for TSMC's future requirements? And maybe one last follow-up is that if we compare 2.5D and 3D, would you need more substrate for 3D? Thank you.
Okay, well, Brad's second question is on substrates. He wants to know, with the development of substrates and the adoption, do we see further developments in terms of new materials? Will we see more substrates used in 3D IC versus 2.5D? And how do we secure the substrate supply?
Well, this one, we are working with the substrate partner, and your question is on the 2D, 2.5D or 3D, both are important. But let me tell you one further step. We're only interested in the very advanced technology. We are not going to develop any commodity of the substrate technology to compete in the market. No, we are developing for the very high performance computing or very large substrate to support TSMC's customer. That's our purpose.
Okay, thank you, CC. Operator, can we move on to the next participant?
Next one to ask questions, Chris Sankar from Cowen & Company.
Yeah, hi, thanks for taking my question. I had two of them. The first one is, when I look at your full year guidance of 35% revenue growth, it looks like calendar 4Q or the December quarter is going to be sequentially down more than 10%. And that hasn't happened in a long time. So I'm kind of curious, how much of that is driven by demand versus FX? And then the second question, follow-up, is if I look at your capex run rate, the first half is running at about 17 billion, which is below the lower end of your full year guidance. So I'm kind of curious, what are the tool delays that's causing the push out of capex into next year? Is it like EUV? Is it like depth etch tools? Any color on that would be super helpful. Thank you very much.
Okay, so Krish has two questions. First, he's looking at our full year guidance to grow mid-30s, and he says this implies a decline in the fourth quarter.
No, I don't think so. We did the calculation. Maybe you can do that again. It's at least up.
Yeah. Krish, I would note that when we talk about mid-30s guidance, as CC said, that is in US dollar terms, okay? And then his second question is on capex and sort of looking at the capex. His question is, we have already said it will be closer to the lower end of the range. He wants to know what is driving the capex. Is tool delays? Is it EUV? What types of equipment?
No, I don't think we can go into that kind of details. But some of them got pushed out to next year, as CC mentioned. And every year, the capex profile can be different quarter by quarter.
Yeah. Okay.
Thank you very much. Thank you.
Okay, thank you. Operator, in the interest of time, I think we will take questions from the last two participants, please. So let's move on to the next.
Yes. The next one to ask questions, Frank Lee from HSBC.
Thank you. I want to just ask a question on, I guess, the overall profitability and also pricing, because it seems like this year we started to see, the foundry price increase, and a bit unusual for TSMC. And going into next year, it looks like there's some anticipation of further price increases. But at the same time, we're also seeing, potentially inventory correction. So just trying to understand the pricing strategy itself. Is this more of a reflection of perhaps the structural profitability for this cycle being different than the past, or are there any kind of, costs that we're seeing this time that we haven't seen in past cycles?
Okay, so Frank's first question is on pricing. He wants to know what is driving our pricing strategy. How do the cost inflation or factors play into it, and really what drives TSMC's pricing?
Yeah, we do not comment on our pricing details. These are the private discussion between us and our customers. Having said that, our pricing is strategic and value-driven, not opportunistic or cost-plus. We work closely with our customers to provide our value, and we will continue to ensure that our pricing reflects our value creations, including technology, ecosystems, and services, and capacity support. By taking all these actions, we believe we can achieve a long-term gross margin of 53% and higher. We do face manufacturing cost challenges. As we mentioned, rising raw materials, utilities, and tool cost, etc. But having said that, we still think that the 53% long-term gross margin is achievable, and 53% and higher.
Okay, Frank, do you have a second question? Yeah, sorry.
Yeah. Sure. My second question is, I understand, the overall view on that, but it's given what you guys just talked about, the overall cycle. I know you still have some, the leadership and the advanced side and everything else, but is there a potential build effect where your customers could see a stronger second half this year in anticipation of price increases, and with the adjustment going into next year that we see some more weakness in the first half, more than anticipated in the first half?
Okay, well, Frank's second question is, with pricing, could there be a situation where customers, will pull in more of their business to second half this year, and thus we would see a weaker first half next year?
No, we did not see that. We are actually we are working with our customers, and we try our best to support our customer. As I said, even right now, our capacity remains very tight. So, the switching between the next year's first quarter and this year's second half, no, We did not see that. Just simply put it.
Okay.
Great. Thank you, Frank. Operator, can we take questions from the last participant, please?
Yes, the last one to ask questions, Robert Sanders from Deutsche Bank.
Yeah, hi. Thanks for taking my questions. I just have two. The first one is just if you could just discuss how much of next year's revenue is under LTA. The reason I'm asking is because there are some people in the market thinking that customers may be fearful of pushing out wafers because they may be jeopardizing agreements for next year. And then the second question would be just to, on the chiplet question, I was just wondering what percentage of 2-nanometer HPC designs will be using a chiplet architecture. Is it the majority? What's the adoption rate? Thanks.
Okay, so Robert's first question is he wants to know how much percentage of revenue do long-term agreements with customers represent for TSMC? Maybe Wendell can address this question.
Yeah, Robert, we don't discuss the details like that. We work very diligently and closely with the customers to plan the capacity, including receiving the prepayments for capacity support. And we will continue to work with them to determine the best way to support them going forward.
Okay, and then his second question is on N2. He wants to know for HPC applications on N2, what is the percentage or that may adopt a chiplet architecture approach?
I cannot release the number, but let me assure you that the number of the customer using the chiplets in the N2 or the 2-nanometer technology will start to increase, and that will become a major approach in the 2-nanometer and the following technologies.
Okay, thank you, CC. Thank you, Robert, and thank you, everyone. This concludes our Q&A session. Before we conclude today's conference, please be advised that the replay of the conference will be accessible within 1 hour from now, and the transcript will become available 24 hours from now